I'd like to start this conversation with a little bit of introductory ones about Shunwei and Tuck himself. So how did you come up with the idea of founding venture capital in China, although you are Singaporean, grew up in Singapore, went to school in Singapore and Stanford? And what made you decide that?
Well, I think for Shunwei, first of all, the name, our name Shunwei is the short form of a Chinese idiom called 顺势而为. And the translation is leveraging on a mega trend to achieve greatness. So I have been living in China for the past 16 years, and it's obviously a very huge market, and all of us here known that China for the past 20 years has grown at a phenomenal pace, unseen in recent history. So in 2011, when we decided to start Shunwei, it was almost a no-brainer to us. It's a huge market with a 1.4 billion population, strong GDP growth, and after more than 10 years of venture investing in China, the venture ecosystem in China has become was flourishing. So we decided that the time was ripe for a Chinese homegrown firm to become a competitive player, as competitive as the mainstream players from Silicon Valley. And we've been fortunate. We started in 2011. We raised Fund 1 at $225 million. As of today, we are already managing Fund 4. And our total funds under management is over $3 billion. So yeah, that's it. And today we are invested in about 400 companies. We have about 22 unicorns in our portfolio, and we have had 9 IPOs. And this year, I think if all else go as planned, we should have 4 IPOs this year.
Okay, so your representative portfolio companies include Xiaomi. Is that the biggest portfolio company so far? Or?
Yes, yes.
Okay. PatSnap, one more, Kingsoft, and Blue D. Those are representative portfolio companies.
Some of the investments, yes.
Okay. And you talked about exits. So you're not very pessimistic about your portfolio companies' exit prospects this year, or for the coming 1 or 2 years?
I'm sorry.
You're not particularly pessimistic about the exit window.
The 4 IPOs that I mentioned, these are already quite certain. Yeah. We have one of them already approved by the Chinese government, the CSRC, for listing on the Shanghai Technology Board. And then we have 3 IPOs targeting for US listing. They are all in a fairly mature stage with the bankers engaged and should be submitting their confidential filing in the near future. So I think overall the 2019 public capital market has substantially outperformed my expectation. I think 2020 probably we should see something similar to 2019, maybe not as bullish, but I think the exit window or the IPO window should continue to exist in 2020.
Mm-hmm. So deciding factor would be the individual companies' capability to keep them profitable, or at least promise the profitability going forward.
Yes.
Okay. This panel's main theme is replicating the China playbook in India and in Indonesia. So let's move on to how you guys came up with the idea of expanding your investment scope outside China. When did it happen, and what made you decide expand your scope?
Yeah. So I think a very important part of our business is to constantly searching for new trends. And we try to invest in these emerging trends as early as possible at the inflection point of the S-curve. So we've been constantly doing that for, like, in the past 10 years. We started with mobile internet, then we got into consumer IoT, we got into smart manufacturing, deep technology. In 2015, we decided to invest in India, and And around 2016 or 17, we started investing in Indonesia. For various reasons. I think we have seen how mobile internet developed in China over the past 10 years. If we turn back the clock and look in 2010, the mobile internet industry in China was, people were very, believed that it was going to be big. But if you turn back the clock, nobody expected it to be so big. It's substantially larger than what Chinese investors or Chinese entrepreneurs expected in 2010. So we saw similar opportunities in India and Indonesia. When we invested in India in 2015, it was at a very crucial transition point. Feature phones transitioning to smartphone. In terms of smartphone penetration, it was exceeding 100 million smartphone shipment every year, very similar to China in 2010. And plus, Reliance Jio was rolling out 4G network. So we came to the conclusion that investing in India as well as Indonesia, when there's a significant shift from feature phone to smartphone and huge adoption of a mobile usage, we should see many opportunities in the future. And in 10 years' time, many of them could be very fruitful investments.
On the other hand, China was still growing very rapidly, almost without no limit. And if you decide invest other things than in China, it could divert your focus. And probably it's not going to be a very efficient way of utilizing capital you raised. Wasn't that a fear you had? I mean,
well, China is definitely a home ground to us. It's our most important market. If we don't do well in China, I think then no matter how well we do elsewhere, it doesn't matter. So as of today, we have a very strong team. I have 5 other partners. I see my role as the guy that is constantly searching for new trends. So for example, when we decided to invest in deep technology in 2014 or 2015, I was the guy to lead the efforts to invest in deep technology. And then investing in India, I was the guy flying there. I still fly to India once every quarter. Okay. Indonesia is the same. So, so I see my role as constantly searching for new trends and direction for the funds. And then in China, I have a strong team of partners and mid-level investment professionals. So I think it's a fairly well-run operation. But I obviously continue to spend at least half of my time in China. Yeah.
Okay. Okay. Very interesting. It's a kind of maturing phenomenon happening in China in some genres, like I don't know, social networks or peer-to-peer lending. Is that a part of the factors you or your peers in the industry might be willing to go out of China? Or isn't that the case? I mean, it depends on your interest. You know, you want to be in those emerging markets before dawn and earlier than others. Is that the main factor, or is there any maturing factor in China?
In the past few years, a few observations that I've seen. First of all, Chinese tech companies who have grown to some meaningful size. They are ambitious.
They're the biggest in the world.
Yeah, they're ambitious, right? They want to continue growing. They're searching for new growth. So these would be people like Alibaba. I think Alibaba is very active in Indonesia and Southeast Asia, including Tencent, including Xiaomi, right? Including ByteDance, who's been very successful with their TikTok. So one big trend that we observed in the past few years is that Chinese tech companies are expanding overseas. Another trend that we observe is that we are a strong believer. The China experience is much more relevant to India and Indonesia than the US experience, right? Because across these countries, we share many similarities. Densely populated cities, developing countries, and with generally young and talented, ambitious individuals and entrepreneurs. So we also receive many visitors from India, from Indonesia, coming to China, asking us what's new, anything that's interesting that they can share, that they can learn. Very similar to when I was in China maybe 10 years ago. I would do my annual pilgrimage to Silicon Valley to see what's new, right? So, so these are all signs that we observe over the past few years, and I think it makes a lot of sense. For us, we are a fairly large fund now. Our latest fund is 1.2 billion. So a substantial majority of that will invest in China, but we believe that we see opportunities in India and Indonesia where we can deploy hundreds of millions of dollars too. Yeah.
Okay. Okay, then let's talk about specifics of your portfolios. Probably that would tell most effectively about how China playbook could be effective in India and in Indonesia. First, since we are sitting in Jakarta, I think we should focus on Aku, which is one of your representative Indonesian portfolio companies, which is a fintech company. I understand, so Aku's main business is retail credit. So it allows consumers to do shopping with installments rather than cash. Is that the right understanding, or does it also do cash lending to consumers?
Yes, they do that, yes.
Okay. And do you see a success model, a best practice model in China when you looked at this company?
Yes. In fact, there are already 2 companies that are listed with a similar model.
Okay.
You have Qutian and Fenqile. These are all, they started with consumer financing, and then they got into some sort of a cash lending. And Aku is unique in that the founding team is actually Chinese. Oh. Yeah. So that's also another sign that we observe, that Chinese entrepreneurs are developing products for outside of Chinese market. So Aku would be our first investment in a Chinese startup targeting the Indonesian market. And then plus the few signs that I mentioned earlier. So together, we came to the conclusion that there must be very good opportunities in India and in Indonesia that Shunwei could make attractive investments. Yeah.
Well, actually, consumer credit business is not a very new business, and it's been a very old business. But basically, they have been lending money with very, very high interest and pressure consumers and cause a lot of problems in society. But what is the difference from those old type consumer credit businesses versus this new consumer credit business?
Very simply, it's all mobile. And with the mobile usage, there's data analytics, plus there are, in different countries, there are information that you can procure from the government or government data sources that you can acquire, and through certain algorithm, then you can very quickly give a credit score for these users and decide on who to give and who to give or who not to give loans to.
And also probably credit limit is set at a very low level so that there will be very few defaults. Is that?
I think in the fintech lending space, different startups will have a different strategy. Yeah. So in India, we are invested in a few. Some of them are targeting short-term, small quantum. Some of them are targeting salaried workers with a higher quantum and longer-term loans. I think different startups will have a different strategies and target customers.
Okay. Actually, in the fintech space, you have CrazyB. That's a kind of fintech company targeting students, right?
Yes. Yeah.
And also, what else?
They have expanded beyond students. CrazyB is interesting in that CrazyB, it was an investment we did together with Fenqile. Fenqile would be the equivalent of CrazyB in China. And Fenxile is already listed in the US. It's a unicorn.
Okay.
Yeah, so CrazyB, and it's interesting in that the founding team, the CEO is Indian, the COO is Chinese.
Oh, really?
Okay. So it's very unique. So right from day one, CrazyB was able to learn very quickly from Fenxile about their experiences, how they build the algorithm, how they build their business, etc. And then, and I think this would be in the fintech space in India. This would be our most, at this point, the most prominent investment here.
Okay. And actually, in the early morning, Joji said an interesting thing about your thinking. And you're a believer in the possibility of new social networks in India, other than Facebook and WhatsApp and those existing big players. And could you elaborate on that? And who did you invest? I think ShareChat and Vocal, those are
ShareChat and Pratilipi, yeah.
Okay.
Yeah. The equivalent of ShareChat would be Weibo, or the Twitter of China. The equivalent of Pratilipi would be China Literature, which is a Tencent subsidiary and listed in the US. Yeah.
So what makes you think that it's possible that there could exist other major social networks?
Yeah. What we have seen is that for people who are unfamiliar with India, most people would assume that most Indians would speak English, right? But the reality is that maybe just around 10% of Indians are fluent in English. And Facebook and Twitter, although they have been present in India for a long time, most of their target audience are English speakers. So we believe there's a huge opportunities. 90% of Indian population, they speak local languages, and there are over 20 local languages. So we believe there are huge untapped opportunities, even untapped by Facebook or Twitter today, that could be tapped by emerging startups in India. So that was one of our rationales for investing in ShareChat. Yeah. So focusing on vernacular languages.
Do you see localization efforts by big players like Facebook or Google even are not enough and are not appealing enough for those who only speak their local languages? Or
because a lot of these for big global companies like Google, they have been very good at building a global platform, right? Such as and like similarly for Facebook and Twitter, they've built global platform. But in certain product targeting specific market, it's harder for them to go deeper because they're a global platform. So for example, Google Map. Yeah. Google Map is very good. Okay, I use Google Map all the time. But even if Google Map is present in, even if the Chinese government does not limit Google's access to China, I think Baidu Map is a much better product to use. There's many minute details in the usage experience and features that make Baidu Map a much better product than Google Map.
I totally agree. in China, the same thing might happen in India or even Indonesia here. Okay, so there are a lot of windows of opportunities for local startups. In other words, is that the basic understanding?
Yes.
Okay, and other businesses which are very interesting is social commerce. I think so. There is a very big social commerce company called Pinduoduo in China. And the company called Meesho, which is one of your major portfolio companies in India, is called Pinduoduo of India by local media in India. So do you agree, or the model is a little bit different from Pinduoduo?
Well, frankly, it's quite different from Pinduoduo, but for simplicity, people call it the Pinduoduo of India. But Meesho has proven to be a very powerful platform. The reseller network in India has existed for decades. Many of these resellers are housewives, and they sell products to their circle of friends. And these are trust-based e-commerce. And they have existed offline in India for decades. What Meesho has done is essentially technology enabled them so that these resellers, they could sell their products through WhatsApp, and they don't even have to go out to source or buy those products. Meesho enable the supply chain as well. And every day, Meesho just recommend a list of products. And it's a curated list based on your previous selling records. They give you a curated list of, these are based on our analysis.
Yeah.
We believe that maybe these 10 products will sell well to your circle of friends.
Okay,
Yeah.
so that reseller, all she or he has to do is just copy and paste that link to his or her WhatsApp post. Is that how it works?
Yeah. It's very simply, they just focus on selling.
Uh-huh.
So Meesho takes care of all the supply chain, the fulfillment,
Yeah.
and enable them with technology that they can sell through mobile rather than face-to-face.
And she can earn commission.
Yes.
Okay.
Yes.
And the similar model I noticed was Evermos in Indonesia, which focuses on actually halal shopping by social commerce, right? It's a very, very uniquely Indonesian model. And could you explain a little bit about this company?
Yeah. It's a very early stage investment done by us. This was a Series A investment. Based on our China experience and based on our experience in India, we gained the conviction that social e-commerce would be very big, could be very big. And we felt we have a very strong conviction that in Indonesia, social e-commerce would also be very big. So my team then, we went out searching for potential investment opportunities in this space. We have seen probably around 5 social e-commerce startups. And based on our based on our evaluation, we believe that Evermos, in terms of a team, in terms of the numbers that they have, the traction they have shown, they are right now one of the most promising ones.
And I noticed that you only invest in India and Indonesia outside China. Is that a kind of intentional policy that you have had, or are you open to other possibilities in other markets?
At this point in time, only China, India, and Indonesia, because I like to be focused. Partly because of my bandwidth issue. Yeah. One of my friends said that, why don't you go to Vietnam, right? You could just hire a VP or a partner to go to Vietnam. But if I were eventually have to make whatever investments they propose in Vietnam, I will have to make the call, right, to invest or not. And if I don't make the efforts to fly to Vietnam, how could I make good decision? So I think we need to be focused.
Okay. Actually, we have 1 minute left. Question about difficulties in replicating Chinese models in India and Indonesia. Are you finding any regulatory hurdles or other kinds of, macro kind of hurdles?
Not so much of regulatory hurdles, but I think with the information time gap is closing. Plus, there are also other Chinese funds looking into these 2 markets. So then we have to constantly ask ourselves, how do we maintain our unique competitive advantages? And Chinese technology companies are also very interested in this market.
Yeah.
For example, TikTok has done very well in India, right? So, I think competition has increased over time.
Yeah, and so that's another point I'm really curious. So, how do you think those big guys, big Chinese guys like TikTok or Alibaba or Ant Financial, WeChat, Tencent, how are they actually approaching those markets? I have an impression that they are limiting themselves to investors rather than operators. And do you think they keep being like that, or do you think they're going to change into major to become major players themselves in those markets?
Different companies have different strategy. Some of them have chosen investing or acquisition. Some of them have chosen to build by themselves. So for the latter, Xiaomi has been the one that is building operation in Indonesia, in India. Similarly for ByteDance, they've been building their own product in India, and also for global platform TikTok. So I think different firms have a different strategy. I think they will all find their own ways.
Mm-hmm. And if your Chinese portfolio companies started discussing expansion into India or Indonesia, are you willing to support them financially?
Depends on what they do. we have to be very clear about what competitive advantage do we have. So, for example, I think for the Chinese startups, their advantage would be they probably have an established technology platform already. And they probably, in terms of fundraising, it might be easier for them because the access to capital in China is easier. However, if let's say if they were to venture into India, then I think there's no talent advantage, right? I think Indian entrepreneurs are as good as Chinese entrepreneurs, and in terms of intelligence or whatever, I think they are the same. So there's no talent advantage. What advantage do you have going into India? Similarly, in Indonesia, right? For Chinese startup coming to Indonesia, what advantage do you have? So whether we fund them or not depends on whether they can convince us they have a unique advantage competing against local players.
Okay, very interesting. Actually, we ran out of time. Thank you for your very interesting insights. And please join me appreciating his insights and very nice conversation. Thank you very much.
Thank you so much.